I pick a stock of the day. I've been a bit cheeky today considering it's earnings season. I thought I'd do a quick fire double. CSL and Santos both reporting this morning. CSL's full year net profit dropped 6% on the previous year, coming in at $2.2 billion compared with 2.3 previously. Still feeling the pinch of weak plasma collections in the first half, though growth in collections has been strengthening as the pandemic recedes. CSL expects the higher cost of plasma will continue through to the next financial year. Is also committed to providing guidance to include the CSL Vifor at the first opportunity. Shareholders will see a final dividend of $1.18 US per share. Carl, what did you think of CSL's update, and what do you think of the stock at the moment?
Yeah, a little bit more of the same, isn't it? It's the same narrative we've been hearing from CSL for, 18 months, really, isn't it? Yes, they're struggling. Well, not struggling on the plasma collections. That's getting better. I mean, if you look at the second half of the first half of this year, of course, getting better from the half before that. One of the problems, Koshi, is that they're having to pay a little bit more to get your donors in the US to come in and give the blood. So that's a reflection of the very strong labour market there, because historically it's your lower income earners or unemployed people that will go in, give the blood and get paid by CSL on the way out. Works for the person, works for CSL. But of course, employment is so high there, wages are going up. It's harder to attract those people. And looking forward, maybe a misstep in the US economy could actually work in CSL's favour. And maybe that's where we're headed, to be fair. I mean, a technical recession right now, who knows? I mean, they'll tell us what they think it is after the fact. The other part of it was the Seqirus, which is the flu vaccines, and that's still pumping. So same. I think where the market got a little bit upset is just on that cost line. Otherwise, it was largely in line. And I suspect, you talk about, congratulations, by the way, Michael, on your nuptials there. But I suspect... Oh, was it? Of course it was. We'll talk about travel later on and some of those issues. But I suspect the price probably ran ahead of this update, I'd say. And we're just getting a little bit of a pullback. Look, we've had a buy on it for a little while. I'm happy to go a hold. It does do a little bit of damage to the chart. That's what I'm worried about. A supply event like this is not a bad thing if you can come back from it very quickly, and that's the bit I need to see. So ask me in a week's time, sort of thing. Okay. I can go hold. Yeah.
All right, I'll make a note of that. Michael?
Yeah, the numbers were like those headline numbers, at least, were pretty mixed in terms of beats and misses, but it wasn't a disaster result at all on the headline numbers. The market, I think, obviously cost was one of the little issues that I think the market's a little bit frustrated with, but also the fact that guidance is still excluding the recent acquisition of that Vifor company, which will give them access to the renal disease market. So, look, it is good to see, obviously, the recovery trajectory of the plasma business continue. They're opening, I think, another 26, or have opened another 26 collection centres, so that will enable them to keep that momentum going, you would think. We've liked this one for a long, long time. We've been buying clients into it fairly recently, and look, for the last 6 months, we've probably been buying it. However, it's still one of the highest quality businesses on the ASX, still guiding for 7 to 11% revenue growth next year. For a company of that size, it is very impressive. The earnings guidance, I think, was a bit below market expectations, but they do have a tendency to under-promise and then over-deliver, ratchet those forecasts up as the year goes on. So we'll be happy to buy it. I wouldn't rush out and buy it today. I'll probably wait a couple of days just to see. Hold for the next few days, just to see the analysts, how they come out and what they say, and just how that puts pressure on the stocks in the next couple of days.
All right, the other stock I wanted to sneak in today was Santos. Underlying profit in its first half year results, turning over $1.2 billion compared with $317 million in the previous period as the price of energy skyrocketed. It maintains its sales volume guidance range for the full year. Production guidance also remains steady. Santos provided an update on a number of its projects, saying it's in advanced discussions for the sale of a 5% stake in its PNG LNG project. Declared an interim dividend of 7.6 cents a share. Michael, what do you think of the Santos result?
Yeah, it's another company that we hold for clients. I thought it was an okay result. It's a bit of a year of missed opportunity for Santos shareholders, I think, just because the oil price has been so buoyant. The LNG price has even been more incredible. So for whatever reason, the market hasn't really got too excited for Santos, even though it's in the best shape as a business that it's been in the last couple of decades probably, just given that the debt is well and truly down. Obviously, they did the large-scale acquisition of Oil Search. They're obviously still going through the process of incorporating and embedding that down. So that might be what has distracted or at least reduced some interest in the company. But there are a play on the LNG theme. You'd have to think that demand will increase. At the moment, that Narrabri gas project's probably worth zero on the balance sheet. At least investors are attributing zero value to it. So if they can get that fast-tracked, that should offer them some upside as well. So as far as energy companies goes and energy exposure, we're happy to hold Santos, and we'll be comfortable in buying it now if you want that energy exposure.
Okay. Carl, what do you think of Santos?
Yeah, I think look, we've had a sell on it for a little while now, just on the basis that it's kind of Woodside's poor cousin at the moment. I think Woodside is where the quality is in terms of their assets and their exposure to export markets, whereas Santos is more of a domestic LNG play, and LNG is where the opportunity is. Oil prices more recently have come down, so we're talking sort of 90s now, not 120s. And my tip, I've been on ausbiz many times telling viewers that I do expect lower oil prices ahead as the Saudis do increase production. Think about oil, Koshi, is that when oil prices are up, the Saudis can't seem to produce much of it, but when oil prices are down, the Saudis can produce plenty of it. They find all the production you need, right? So oil prices heading down, you'll find the Saudis all of a sudden the spigot start to loosen. So look, a little bit bearish on oil, a little bit bearish on Santos relative to Woodside in that trade. I think there's a bears trade there, as in you could buy Woodside and sell Santos. So I'm going to stick with my sell rating on this one. We've got a target around about that sort of just under $6 mark.
Interesting. Santos came up on Monday on the panel here. Both Mathan and Gora preferred Woodside and Karoon.
Okay.
And Karoon was the other one that they like at the moment. So, didn't like Santos.